Who would have thunk the cost of fish and chips in England would cause our interest rates to go up? Hey, this is Larry Gonzales from Align Mortgage with your Mortgage Market Minute. I'm going to talk to you about things that are impacting our housing market today. But before I go any farther, please like, comment, or subscribe. And subscribe to my page. Helps me increase my audience and educate more people and have more people involved in a dialogue. So let's get going. Where are we at with prices? Prices are coming down. Where are we at with inventory? Inventory is definitely up. And rates? Well, rates have gone up this week. Go into the economics of what's going on. We had a flat retail sales report come out. The expectation was that it would go up a little bit, but it was kind of flat. The kind of interesting news is companies that are in the retail industry like Walmart, they're making their reports this month. Actually, Walmart, they actually do the demographics of the shoppers. The haves, the people with a lot of money making over $100,000 a year, guess where they're shopping these days? They're shopping at Walmart. They're not necessarily buying the clothes, but the appliances, because Walmart's got a glut of inventory, so a lot of things are on sale. But they're going to Walmart to shop for goods and shop for food, all right, to the grocery store. That's kind of big news. And that impact kind of talks to a couple things. One, people who have money are smart with their money. They're going to go where they can get their goods at the lowest price. It's expensive everywhere else. You go to Safeway, you compare prices. Don't bad talk Walmart, all right, because they are still pretty inexpensive. People are still spending money, or they're flat. So that means people are still spending money. All right, may not be money they have, it may be off of credit cards, but they're still spending money. The Fed's trying to slow that down. All right, so that's just another reason for the Fed to raise that Fed funds rate when they meet again in September. Mortgage applications. Mortgage applications are down 18% year over year, over 2% drop. Week over week, lowest level of mortgage applications in 22 years. That's a big number. What does that mean? That means demand is slowing down. And it's not because people don't want to buy a home, people can't afford homes. All right, housing starts. So the National Association of Home Builders report came out on Monday. This is their market sentiment. Anything above 50 is expanding, which is good. Anything below 50 is contracting, which is not good. It came in at 49. It's the first time it's been below 50 in a long time. A couple of years, 2-3 years. There's a couple of reasons. One, fewer people, less traffic, less buyers. Again, demand cooling down. Not because people don't want to buy. People got to live somewhere. Rent's also going up. Kind of unaffordable for many buyers to purchase new construction. And here's the other problem with new construction. The builders, when they sell the property, they're not making enough money to cover all their costs. The ROI isn't there, so why are they going to build more houses than they can? They are building fewer houses because they're making less money on them. You know, the Fed is seeing all this, and the Fed released their minutes from their meeting 3 weeks ago. And one of the Fed presidents talked this week, and he was basically saying, you know what? We're going to keep raising the Fed funds rate until we get inflation down near 2%. The question becomes, will they overshoot and then really kind of put us in a bad position with regards to our economy? Most likely, they are going to raise the Fed funds rate again in September. I made a joke about fish and chips. Interest rates have been going down and pretty, or at least pretty steady the last couple weeks, certainly since our inflation reports came out last week that showed that inflation was cooling off. Not going down necessarily, but kind of steady, which is not going up. So again, the good news is that it wasn't bad news with our inflation reports last week. Well, UK, they just came out with a double-digit inflation report. That kind of caused our interest rates, our bond prices to go up. The 10-year went up, and interest rates also went up. Almost a half a point increase over the last couple days in interest rates, and in large part it's because of fish and chips, or should I say the cost of fish and chips. Really, it's what happens in the absence of any news on the economy. People tend to make up bad news. They're looking for something to post, so anything that comes out, they're going to make it larger than what it seems. And there's a bigger chance of rates going up when there's no news than rates going down. That's kind of what I've been seeing over the course of the last couple years, what I'm seeing right now. Do I think rates are going to stay up high? No, I don't. We still have a couple economic reports that are coming out. Towards the end of the month, we have the PCE, or the Personal Consumption Expenditure Report. Then we go into September, and we have the next Consumer Price Index and the Producer Price Index reports. Those are both inflation reports. And really, we will see where inflation is going in that report. And I think that report will have a big impact on what the Fed does for the Fed funds rate, and really have a big impact on where our interest rates go. If we do see a decline in these inflation reports that are coming up, then that's a good thing, and interest rates should start coming down. What does this mean if you're a buyer? I'll tell you what, depending on the area of town you're at, that you're looking, demand is high. And open houses, you're still getting in some areas 20, 30 visitors and open houses on the weekend, and some you're getting 2 or 3. What does that mean if you're a buyer? You have a good chance of getting your offer accepted. But please, here's something that's been happening. People are submitting offers, they're getting offers accepted, then they see what their mortgage payment is, and they're like, no freaking way I'm gonna pay this, and they drop out of escrow. And that's frustration for everybody involved. Time is money. So when you're putting in an offer, know what your estimated mortgage payment is gonna be. We're in a market where right now, we want everyone to win, everyone to come out on top, and the best way to do that is to work together. And that's what I propose. Let's all work together. Make it easier for everyone, because we are in a tough economic environment right now. But not just housing. All right, it's tough all over. All right, energy prices have come down, but it's still pretty expensive. So just look at your electric bills. Who here loved their electric bill they got this one? Who here just about dropped dead when they saw their electric bill? I did. That's all I got for today. Hope you have a great weekend, and that's it. I'm out.